Every once in a while, the market sets up in a way that only the sharp-eyed can see. Bitcoin isn't just going up a little, it's quietly writing the script for its next explosive move. We're seeing the same early signals that, in past cycles, led to life-changing breakouts. While skeptics are still waiting for some perfect entry, the trend has already shifted, liquidity dynamics are aligning, and the macro backdrop is preparing to throw fuel on the fire. If you think the top is already in, you're about to be left behind, because the real move may just be starting now. After weeks of grinding sideways, Bitcoin has pulled off the technical reversal bulls have been waiting for. The market tried to pin it under $112,000, but the bears lost control. Not only did Bitcoin break through multiple key swing highs, it actually closed above them, officially flipping the chart into a confirmed bullish trend. This is no small detail. Every major bull run begins with this exact shift, from a pattern of lower highs and lower lows into higher highs and higher lows. Right now, Bitcoin is building that staircase up, and history shows us this stage is often when smart money enters aggressively before the crowd even notices. Ethereum, the quiet beast waking up. Ethereum has quietly printed a new local high, smashing straight into resistance around $4,456 before cooling off. What's critical here isn't just the rejection, but the nature of the pullback. It was shallow compared to prior drops. That means buyers are eagerly scooping up supply, absorbing every dip. If ETH clears this resistance decisively, the next target is $4,845 and beyond. And here's the kicker: ETH hasn't even begun to flex yet. Much of the market's momentum rotated into Solana, leaving ETH relatively calm. But calm markets don't stay calm forever. Ethereum tends to lag slightly before catching fire in a way that ignites the entire altcoin sector. Solana and the altcoin rotation. If Ethereum is the quiet beast, Solana is the sprinter already on the track. Sol smashed through its $222 ceiling, retested it as support with textbook precision, and is now eyeing $240. That's a clean 10% upside still in play, and the structure suggests continuation. When you see these kinds of break, retest, go setups, it usually means the rally has legs. Across the board, altcoins are showing life. XRP, DOGE, and ADA have all printed strong bounces, and these aren't random moves. They're signals of capital rotation. Money is starting to drip feed from majors into alts, a classic prelude to wider market expansion. Here's where the story gets explosive. The market just received a month-over-month disinflation print, which gave risk assets a lift. But the big event is still ahead. CPI, core CPI data this week, and, most importantly, the Fed decision in just days. The base case? A 0.25% cut, already priced in. But prediction markets are flashing something spicier, up to 18% odds of a 0.5% cut. If that happens, it's a positive liquidity shock, the kind that lights a fire under Bitcoin and sends it ripping out of its range. Meanwhile, global money supply is ticking higher, liquidity is seeping back into markets, and history is crystal clear. Every time the Fed slows its balance sheet reduction, the next step is expansion, and expansion has always meant asset prices mooning. Traditional markets and the flow into crypto. Don't underestimate the domino effect. Gold had its run and is cooling off, which usually frees up capital to rotate into riskier plays. The S&P 500 is pressing hard against wedge resistance. A bullish data surprise could trigger a breakout in equities, and once stocks surge, money almost always trickles into crypto. That's the flow. Gold pumps, stocks break out, and then crypto gets its rocket fuel. Right now, we're seeing the early tremors of that chain reaction. Why systems outperform holding? Here's the piece most people miss. Raw, buy and hold, would have left many portfolios deeply underwater during recent volatility. But algorithmic, disciplined strategies have been quietly printing gains, buying dips, selling rips, and lowering average costs. Even in assets like DOGE, these systems have outperformed simple price appreciation, turning chop into profit. For lagging names, such as Sway where price showed a paper loss, the algorithms still carved out double-digit percentage wins. That's the beauty of structured trading. It doesn't rely on guessing the top or bottom, it thrives in the inevitable volatility. The bigger picture. Why I'm insanely bullish. Let's zoom out. Every metric, every historical rhyme, every liquidity cycle points the same direction. The market is not topped out. In fact, if anything, it's just entering the expansion phase. My base case remains firm. Bitcoin's cycle peak is still ahead, with a target zone between $180,000 and $280,000. Ethereum and Solana will ride shotgun, while select altcoins explode in their wake. Liquidity expansion, Fed easing, structural technical flips, and growing adoption all scream one thing. This cycle is far from done. The next few weeks aren't just important, they could define the trajectory of this entire cycle. Bitcoin has confirmed its bullish trend, Ethereum is coiled for a breakout, Solana is already flexing, and altcoins are warming up. Add in a macro backdrop where liquidity is about to be unleashed, and you've got the perfect storm. This is the time to pay attention, not look away. If you're serious about riding this wave, smash that subscribe button and turn on the bell. You'll want to catch every setup. Drop a comment below. Do you think the Fed shocks with a 50 bits per second cut, or does Bitcoin rip without it? I'll pin the sharpest answer. This isn't financial advice, it's conviction built on charts, liquidity, and history. Stay hyped, stay prepared, and I'll see you at the top when Bitcoin redefines its limits.